Hello and good morning everybody. You're with Martin Panev, Chief Account Executive Trading Analyst GDMFX. Welcome to today's European session market outlook. Starting with covering a short coverage of the events yesterday. US markets first. The Dow and the Nasdaq had severe losses yesterday. The Dixie index in general went down pretty much with 1 point, or almost 1 point. We saw durable goods orders 3.9% worse than expected and 1.3% lower than previous. Consumer confidence though 7.8 better than expected, 9.8 higher than previous, 7 years best. Durable goods orders excluding transportation a little bit worse than expected as well. Market services PMI 0.2 better than expected. Market PMI composite 0.7 higher than previous. New home sales again higher than previous, month on month 18.3%. The Red Book index year on year and month on month 0.2% higher than previous and 0.1 lower than previous. New home sales month on month 0.582 million better than expected. The Richmond Fed manufacturing index came as expected. Today we have Tier 1 events from the Fed, interest rate and monetary policy statements. Tier 2, we also have the NBA mortgage applications. Basically, the US dollar has suffered yesterday versus most of its major rivals, within a few severe movements versus the Japanese yen and the Canadian dollar, the loonie, with around 80 pips on both pairs. We are expecting the gross domestic product data this Friday. Moving along to the European markets, the DAX and the CAC had severe corrections yesterday. 170 pips for the DAX and about 50 pips down for the French CAC 40. The downtrend on the main indexes caused by the strengthened euro is already at place. With regards to currency pairs, the euro dollar 110 pips up, the euro pound 20 up, 70 range, the euro Aussie 170 pips up, which already corrected today. The euro versus the Canadian dollar 70 pips movement, euro Japanese yen 40 pips up, and against the Swiss franc 80 pips. The euro Kiwi 130 pip movement up. The German consumer confidence is growing with a very large pace, while the imports price index is showing some contraction. That's from yesterday. A very important inflation indicator from the SNB came this morning. The UBS Consumption Indicator has shown some positive outlook already. It is important as it is a major part for forming the Swiss national GDP. Moving along to the UK markets, the FTSE 100 lost 33 pips yesterday and closed at 6,760. The GDP year on year for the fourth quarter showed 0.1 negative. Quarter on quarter again showed 0.1% negative. Tier 2, we have the mortgage applications, 35.7 thousand, 1,000 negative. And then we have the index of services, which came out negative. Basically, the British economy expanded with less than expected for the last quarter of last year. But nevertheless, it gained ground for an 8th consecutive month and closed the year with a 2.7 growth. Which was the best performance since 2007. The expectations are for the economy to grow with a similar pace in this year due to the sluggish European pace of economic growth. The pound fell for the first time against the euro, losing 0.6% and gained for a second day against the dollar, adding another 0.8% of gains. In terms of currency pairs, the cable 105 pips up yesterday, 175 pips range, going a little bit down today. The pound versus the Japanese yen closed on a dodgy no no change, but a severe range, 160 pips range, going up today. Versus the Australian dollar, 125 pips up yesterday, 260 range, and over 220 pips down today already. The pound versus the loonie closed again on a doji yesterday, 130 pips range, going up today. Moving along to the Asian Pacific markets, starting with the Nikkei 225, which did about 30 pips range, but closed near the open price, and added another 20 points during the Asian session during the night. The TOPIX is also looking green, along with the Hong Kong Hang Seng, the Australian S&P 200, and the New Zealand main index, which did over 50 points better yesterday. Australia has printed the CPI indexes yesterday, and the results were close to the expected, showing contraction a little bit, but then on a positive outlook in general. The Aussie has managed to overcome the United States dollar and the euro with 100 pips and 150 versus the euro currency. We have a few high impact events for the calendar agenda today for those markets, starting with the monetary policy statement and interest rate decision for the New Zealand dollar, and the trade balance outlooks a little bit later. In the start of the Asian session, retail sales and foreign investments in bond and stocks for the Japanese yen. The following day, we are expecting high volatility as per the CPI and unemployment reports from the Japanese economy, which we believe might show some negative readings. The industrial production indexes are due as well, where an increase might appear. That's all for the Japanese yen. I would stress on the Kiwi today. Moving along to commodities, the S&P 500 index had 40 pips range yesterday, ended 20 pips lower than the open, and it's going up currently at 2042 points. The gold declined, bearing the biggest rise in a week as investors assess the outlook for US interest rates before the Federal Reserve ends a two-day meeting. The yellow metal had $25 range, added about $14 on the daily candle, trading at $1,290 currently. Silver had almost $1 range, reached $17.38, now close to $18. Obama plans offshore oil drilling from Virginia to Georgia, Myrtle Beach, a move seen by energy companies but opposed from environmentalists. Oil price dropped again as Saudis resist output cuts amid rising US supplies. The EIA crude oil stocks change is due today in the agenda. Thank you very much for your time. That was all from me from today. I wish you a successful trading day. Cheers. Bye-bye.